Right? Like I got to be in a very conservative campus during the Obama election years, and then I got to be in a much more liberal campus
Mhm.
in a different era, right? So I, if anything, that's kind of the way things worked out, and I'm glad it did because it gave me very distinct perspectives.
The following is a conversation with Andres Klaric. Andres is an immigrant from Bolivia and studied at top institutions including Wharton and Harvard. He also has investment banking experience at top banking institutions including Goldman Sachs and buy-side experience at investment funds including Crescent Capital and H.I.G. Today, he is the founder of Fuse, a revolutionary loan origination software designed to alleviate bottlenecks and streamline the lending process. Here's his story. Andreas, my man, really appreciate you taking the time.
Thank you, Dan. I appreciate you having me over.
Sure, of course. It's I'm very fortunate enough to have a founder of your caliber on the podcast, and especially with the work that you're doing in lending, especially considering during the turbulent economic times that we're in. But just to start out, I know one thing that inspired you a lot was growing up in Bolivia and seeing the wealth divide. So, as you were growing up and you saw this, how did you decide to take change, or why did this inspire you?
Of course, growing up in Bolivia, you see a lot of not only like wealth divide, but also like unstable economic environments. For me, like my dad originally was the one first coming to America, so for me, even going to a bank, I never really seen banks even in the post '08 crisis. I've never seen them through that negative lenses. I saw kind of like the place where we went to pick up money that my dad was sending us. So
Mm,
I always see them as agents for positivity, opportunity, and kind of hope. And that's kind of that. I saw that in Bolivia. I also saw like bank runs in Bolivia. So you you also understand the fragility of the institutions and how like their fate can change over time. And moving to the U.S. and kind of my first couple of years being heavily impacted by what happened in the financial crisis, I saw the important like there are many sectors in the economy, but if the financial sector kind of freezes, it sends
everything.
ripples. Yeah, everything freezes, right? So understanding well, how can I affect that space in a positive way has been like I would say a constant thought in the 35 years of my life.
Has one thing that you noticed been, and I'm sure a lot of people will definitely resonate with this, but have you noticed kind of the bureaucracy in a lot of these banks and how just to make one decision change, you have to go through, seemingly endless layers of management or just decision makers?
I think that that's kind of like the a byproduct of just being a super regulated
Regulated.
industry, right? Like in the you can create a lot of those layers of red tape with automation or with just putting humans on the work. I think after the financial crisis, the decision was like we need to add a lot of folks here, and the regulators are not going to necessarily put a bunch of machines there, right? I think that as years have passed over the last 10, 15 years, there's been more comfort around kind of, hey, like there's this portions of the stack that was originally built to be regulated strictly by humans that like can actually we can entrust software to actually help us do so. But is the procurement process of banks, finance companies, credit unions is pretty strict, right? I would only the only comparable industry is probably healthcare. I mean, I haven't gone through like selling to the government, but I imagine also selling the defense industry is probably akin to that too.
Yep. Yep, for sure. Definitely interesting to hear from that perspective. And I definitely agree. I think it's just a byproduct of heavy regulation, but it's always interesting to see the kind of divide between how regulated a company is and then how easy you are to make decisions. I don't know if there's such a thing as a perfect balance, but I know what you're doing is trying to help out with that balance. So definitely something we'll get into. But on another note, you ended up leaving Bolivia and pursuing education in the U.S. and specifically Wharton. So why did you end up deciding to come to kind of the U.S. and attend Wharton if there's ever a wrong answer for attending one of the best business schools in the country and probably the world?
Well, the interesting thing is that I actually started in Notre Dame and I transferred to Penn.
Oh,
I
interesting.
started, I I did a couple of years in South Bend, Indiana, and then I transferred to Penn. So I actually got to see two very different schools, right, with distinct set of pride of on both. So if anything, uh, I very early on in my student life, I got to see two versions of America, right? Like I got to see uh, got to be in a very conservative campus during the Obama election years, and then I got to be in a much more liberal campus
Mhm.
in a different era, right? So I, if anything, that's kind of the way things worked out, and I'm glad it did because it gave me very distinct perspectives of like kind of the hardline view of the identity of the country and the coastal view of the identity of the U.S. And the fact that I did had that exposure very early on, kind of I think it informed my view of the world, and like it helps me kind of navigate the social fabric of America in a way that it makes me not forget all the forces that are at hand, and like just how amazing it is to be part of and build something in the U.S.
For sure. There's definitely beauty in the chaos. Quick note on that. Is there any reason you switched from Notre Dame to Penn specifically? Did you just want to go to kind of a school better known for finance, or was there another reason?
Yeah, yeah. It was the middle of the financial crisis, right? Like
Mhm.
people's offers were being pulled out. A lot of people were switching majors from finance to accounting. Like it was a different era, like right? Like it was scary. Like and I I had good grades, and just my sister was applying for college at that point, and we were like, hey, if she's applying, let's just help each other and like just proofread each other work and see if we should just apply. And reality is that schools are expensive, right? So I found myself thinking, hey, like maybe an Ivy League school will have a better financial package and stay in Notre Dame. And I was lucky enough that they said yes. And of course, I also was able to save my parents some money. And
Mhm.
yes, you're right. The opportunities, uh, at least the perceived opportunities at that point, felt that like the doors going to Penn were going to be the set of doors that were going to open were going to be more. I mean, you never know the what if, right? I didn't stay in Notre Dame, so I have no idea. But at least directionally, it felt like the right move for me.
Yep, definitely makes sense. And I definitely agree in the sense that, Notre Dame is a great school, but Wharton is Wharton for a reason and they have a great reputation and definitely opens a lot of doors. But speaking of Wharton, during your time there, was there anyone that you think was the most influential to your development as a student or professional?
If I can think of, I cannot think of. There were probably amazing classes, but I would say your peers, right? Like it's really. I do remember starting my first semester, and kind of what I would always say. I've never met someone as smart as some of the kids that I met. Kind of like raw smart, right? And like it's not confused being smart with being a nice person, right? Like obviously in general there's nothing wrong about these kids, but like they not they were not necessarily would be like smart doesn't. We're just talking about raw, like the raw power of their
Like they exude mental, like really mental strength, mental
yeah, the
capability.
intellectual capabilities, right? So, yes, I think I met some of the smartest folks in my life, if not the smartest people, while my time at Penn, and that's as a nerdy kid that gave me uh, it's not humble pie because not that I was bragging, but it gives you that sense of like, hey, like the world is very competitive, and like there are way smarter folks than you, and the world this is just a subset of very smart people, and you you're gonna. I do remember having other Bolivian folks that have gone to Ivy League schools, and then telling me like, as long as you're a little better than average in the context of these schools, you're going to be fine. But you need to kind of the bar is going to be raised significantly when you go to school like this. And I'm sure for some kids also, even if they went to Harvard or any other Ivies or Stanford, I'm sure that for them it was easy. But for me, I noticed like that kind of like quantum leap of some kids just being just machines, right? And and uh, and of course that gives you the inspiration to continue working hard and just realize, hey, like maybe effort can help me at least go in parity in some categories with them.
Yep, for sure. It's interesting. Another one of your colleagues, or perhaps colleagues that graduated earlier, was Steve Cohen, and not to get into
Yes.
the whole shebang that his career has been, but he was also known as a bit of a genius and a bit of a numbers master. So definitely can resonate with the fact that you're going to an Ivy League school and you see a lot of these kids who seemingly just have this raw intellectual capability, but it's also great that you were able to look at that as an inspiration to really push forward. And speaking of pushing forward, one of the things that you were doing after school was getting a job on Wall Street, including working at places such as Goldman Sachs and Credit Suisse. And you mentioned on the Pod Circle podcast as well that it was a really interesting time working at these places after the financial crisis. What would you say really stood out working at these big financial institutions after such a critical time in America's economy?
I was a fake banker, so the clients of the that we were working with, just the context of folks listening, were banks, credit unions, or sorry, banks, insurance companies, asset managers. So they were all scarred of what had happened in the 2 3 years before I started
Mm.
banking, right? And it pretty much M&A had frozen. It was all about that building a very strong capital ratios. Like the obsession was, how do we like
Let's
in
get our capital right.
yeah, yeah, Basel two, and that was kind of all everything was just capital raising and bolstering balance sheets, right?
No
How
M&A.
do you think? Yeah, how are you going to think about tier one, tier two levels of capital? How are you going to think about duration? Of course, like the at that point the rates were super low, so the entire conversation was like, wow, like we're gonna go through hyperinflation and blah blah blah. Of course, we went through that cycle, and reality was that the hyperinflation did not, at least through that cycle, did not happen. And I would say it was just how cautious customers were, how it was just not hurrah anymore, right? Like I do remember listening, hearing about uh, those massive bonuses and things like that, and but of course, like you're well compensated and everything. I'll be lying if I said I was not happy with the way that like incentives worked, but it was definitely not the Wall Street, the
Okay.
pre-financial crisis, right? So I did not see any of those things that like you see in the movies. It was just work, 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 and it's very demanding. And I would say with, with I would say in a positive way without the excesses. So
Mhm.
I, I'm glad I got to get the positives and kind of skip a little bit of of the fluff.
Negative shenanigans. We'll
Yeah,
put it that way.
yeah,
So, for those that don't know, just to kind of extrapolate a bit on what you said, because we were talking off air a bit, and I was mentioning how in a prior lifetime I wanted to work in investment banking. So, for those that are unaware, a FIG banker is essentially a banker that works with financial institutions. So, I think, insurance companies, small banks, big banks, investment funds. But especially during the time that you got to work on it, it was definitely probably a very interesting time to work with these companies because a lot of these companies, like you said earlier, depend on capital to run. Well, any company really depends on a lot of capital to run, but especially ones whose job it is to take money and make it into more money as a
yeah,
main thing. And Basel One, Basel Two, for those who are unaware, are kind of these overarching financial requirements, or maybe not requirements, but requirements for some countries, and other countries view them as really strict guidelines for how to maintain certain capital ratios. And especially during a time like this, I'm sure it was really interesting to work with a lot of these institutions, and you're having these private conversations in a sense that how do we make sure our capital structure is okay? Like we can't let this happen again. So I definitely don't envy envy working at that time, but
no,
really awesome.
it was all divestitures, right? Like
Mhm.
everyone was trying to if there was M&A, it was just non-strategic assets, right? When you think
Mhm.
about ING selling assets in Latin America, just there were a bunch of processes that I saw that they were just trying to beef up. And some folks getting rid of their consumer businesses, but it was not like, oh yeah, let's think big. It was more like this. like peeling the onion and turning everything in much leaner operations.
Yep, for sure. How do we peel the onion and like de-riskify as quick as we can in
Exactly.
the shitty
Exactly.
environment, for sure. But great to hear about that. What you did afterward is really commonly a lot of folks work in banking for a few years, then make the jump into the buy side. So for those that don't know, I mean, everyone hears of the buy side these days, so I doubt someone's not familiar, but just in case, I think of it instead of advising on transactions, you're kind of the investment firm really taking part in buying up these transactions, whether it's public investing or private investing. But specifically in your case, you got a chance to work at H.I.G and Crescent Capital, two kind of very well-known firms. What would you say the biggest lessons were kind of making the pivot from, the advisory side, investment banking, to jumping to the buy side?
Yeah, at first, it's a little bit of luck, right? Like the component of, because there are a lot of talented kids that like go through the investment banking route with the hope of getting one of those jobs. So it's very important to kind of like prepare yourself for those. I have no idea where the how like recruiting works these days, but when I was there, it was a weird year in which the mega funds kind of accept that they were not going to touch any candidates until there was a year into it. I think that has completely changed, and I
Yep.
do remember that it was like a detente because Goldman had told their first year analysts that they would get fired if they started recruiting before X date. And then like one of the mid market funds jumped the gun and everyone started recruiting, and that's how kind of how it worked. But
Hmm.
it was a relatively benign wave. So in terms of like a lot of preparation, right? Doing the modeling, just the typical thing, right? Like just do as many LBOs models as possible. Try to do it in under 30 minutes. Whatever if they tell you this takes an hour, try to really do it in 30 minutes because you're going to be nervous. There's going to be a lot of curveballs and something that like some of us didn't know, and like we were lucky that some of the second years knew about is like a lot of those LBO models for most firms are already leaked, or you could actually get them like if you
Agreed.
ask enough. So you can actually practice in like something that will be resemble a lot those LBOs. But then it's just how do you talk about deals, right? Like particularly the case of the folks in my group, since we were fake bankers, the biggest handicap that we had is that in theory we didn't know about EBITDA businesses, which it's not that hard. Just instead of, but that everyone will put you in the bucket. If you're a fake banker, you're an interest income type of folks, and like you don't understand cash flows and all of that. But everyone does EBITDA business and fake too. Like an asset management business is a EBITDA business, but you still need to kind of convince recruiters that you can do all of that, right? So this goes even if not you're not a fake banker, you're going to kind of convince first that first line of defense of recruiting are headhunters. So whenever you go and speak with headhunters, it's not a cute conversation. You go there to impress them, right? Like when you're going to go have sit downs and things like that here in New York and or other cities that have like a big IB
Financial
groups,
presence.
yeah, you go there. You essentially treat it as an interview. They are the first ones that are going to hire you because they actually decide which folks they send their resumes to. It's not that you send them the resume and they're going to send it to a bunch of megaphones.
Hmm.
They are just going to pick the ones they already kind of liked because they also have a reputation that they need to protect, right? So if you show up like I don't know, like just completely unprepared, be ready to not get calls from these folks. And
Hmm.
then like of course afterwards is all the preparation for the interviews, right? Like network with people from your school that work there, practice the interviews, like paper LBOs, very different than an LBO, right? It's kind of like thinking on your feet and things like that, and like that really help you prepare for that. And of course, like being able to speak to junior, very technical, and just be relatable, right? Like a lot of these interviews are going to be fit interviews too. Like especially after the first two interviews that are tend to be more technical, the rest are just a matter of like
The vibe.
uh, the vibe and you go and just be ready to also spend a lot of hours in quiet rooms because at least from what I recall, like they will tell you come here tomorrow and you think you're gonna have just it's gonna be a 2 hour thing, you end up being there 5 hours. So just make sure that you kind of communicate to your teams that depend on you being in the office that you're probably going to whenever you think it's just going to be 2 hours, always think it's going to be take twice. So very important. Otherwise, you're going to start dropping the ball, and it's going to look very poorly on you at your current job. Right, your current job is the most important one you have because you cannot get a job, or it's very hard to get a job when you don't have one. Right,
Mhm.
especially in IB. What else? And very different to recruit for credit than recruiting for private equity. Right, like
Mhm.
Crescent is it's much more like it was more like just junior credit. H.I.G is much traditional buyout jobs, very distinct set of interviews, different approaches to deal making, but overall like excellent experiences at both of them.
Great to hear about that point, and I really appreciate the recruiting tips there. But also, what would you say were the biggest things you learned working specifically on the buy side and working from the investment perspective?
Uh, I would say when you think about credit, downside is huge, right? Like so, you don't you do not on the credit side you don't have home runs, right? So you're mostly kind of assessed a lot on like the capital preservation, right? Like your ability
Mhm.
not to lose money. Of course, like you have hurdles and like kind of promotes and blah blah blah. But in the credit side, your upside is capped. You might have sometimes like is some junior credit, junior a small equity ownership and make some mess deals. But in general, it's your ability not to lose money, right? And that's kind of the hat that most folks wear. In the equity side, of course, you need to understand downside, but like the possibility of something being a 10x here is something that doesn't exist in credit, right? It's very seldom that exists. So it's important to be able to like think on that upside potential, right? How you're thinking about, and also like the levers you can pull, right? On the credit side, you probably do not have board representation, so you cannot really change much of what's happening within the organization. Whereas on the equity side, you actually have a lot of power to like veer the organization in distinct directions. You can think about M&A, roll-ups, divestitures, multiple ways in which you can create equity value that perhaps the credit side that cannot do because they do not hold the keys to all the things that the company can do, right?
Mhm.
Also, most of the diligence in that are the debt side kind of does their own diligence, but not to the level the equity side does. The equity side kind of has multiple. Are probably the ones that spend the most
Due
on the
diligence.
equity story because because it's more junior too, right? It gets wiped too, so you need to make sure that like you're going to make money after everyone else gets paid, and that's kind of how an equity investor needs to think in terms of value creation.
Yep, for sure. Definitely two interesting careers, and a lot of folks are going into private credit now because just the interest rate environment we're in and banks freezing up a little bit. So it will be interesting to see how that dynamic plays out in the future. But ultimately, you ended up going from working on the buy side to pivoting to entrepreneurship. So, one, why did you make that pivot? And two, why did you specifically decide to go into loan origination?
I, I always wanted to build something down the line. I just didn't know when. I mean, the way I thought about entrepreneurship, there were multiple paths, right? Like build something from scratch, start a fund. There are many paths that I think seemed appealing to me through my life. I had always been passionate about, I mean, since I was a little kid, 18, 19 years old, like remittances were a thing that I studied them in school. I spent a lot of time looking at, obviously, doing my figures at banks and things like that. And I always thought that like that there was a way to recreate the better experiences on the lending side, right? Like just the few times that I applied for loans in my life, they were never really delightful. Like applied for a car loan, applied for student loans. I mean, I do remember applying for student loans even in business school, and like it was just such a cumbersome process, right? Like, and it doesn't have to be that way. And I remember being in early 2020 and figuring out, hey, like it's still like this, nothing has changed, right? So At first I started something with my co-founder in the direct to consumer space, with the thesis thinking that there's a better way to like originate car loans, and that thesis evolved rapidly into what was like Fuse's first inning, and that was kind of like we were helping folks originate auto loans in the U.S. We were selling loans to banks, insurance, credit unions, and finance companies, and within a few weeks of launching, they approached us and they were like, "Guys, so whatever you're doing, like I would never funded anyone as fast. It's a pretty interesting and compelling piece of software that you guys are using. Who's your vendor, right? We want to buy software from them." And we told them like, well, actually, we are the vendor. We built this, and very quickly we realized that selling loans was just not necessarily what we were going to do. What we were going to do was going to sell software, right? We signed up a bunch of customers, and we raised millions of dollars afterwards. And like in essence, we realized, hey, like the real problem that we're solving here is helping lenders be much more automated, and like make that automation continuous, right? It's not just set up the machine, but making that machine self improving.
Got it. Interesting to hear. So one of the things that makes your product stand out from a few of the other, perhaps competitors, is that you advertise yourself or preach yourself as much easier to use than other loan origination software and little to no code. In an industry with, where a lot of stuff is based off data and decisions are based off credit worthiness, how are you able to kind of implement these easy to use aspects in this kind of industry?
Well, the it's a lot of the knowledge is sits within business teams, meaning non-technical teams, that for the longest time have had to kind of like try to convey this ideas to technical teams that are doing a billion other things, right? Like technical teams usually are like centralized tools that are doing like account opening, deposits, and other things that are probably don't have to do anything with lending, and because tools are not self-serve, meaning like easy to use and things like that, like they just they just go turn into like middleware that needs to be implemented by engineers. So is what we've done here is like, hey, let's empower the non-technical teams to do some of the stuff that like frustrates them, and that it's hard for them to explain to the technical team, or just sometimes you just need to go fast, right? Like change rates, like things that are simple, but like if you do it in code, it requires kind of like an implementation plan because you need to check all these things. So if you do it like in a more low code, no code way, you can say, hey, like, let's say you're a car lender, but you want to update all the dealers of like the rates and loan to values that you want to have for all deals, all deals starting next week. Um, you just update that in our system, right? It's just kind of like an Excel spreadsheet instead of actually having to go on code and zeros and ones and change things like that. So that is a huge kind of advantage of our system. The second is just the fact that like the integrations are pretty much out of the box, and you can via kind of open APIs, in open API philosophy, you can actually change things and add vendors without having to hire me, right? Uh, One of the biggest frustrations in our industry is that the incumbent players are kind of like consulting companies, right? If you want to install something, you need to ask them to install it for you, which is pretty frustrating, right? Because that slows down the adoption of cool and new technology. It creates gatekeepers, and, and those gatekeepers kind of dictate who are winners and losers of the adoption of technology. And whoever wins and loses is not necessarily based on who's the better or the
On
worst
merit or
technology. It's
data.
just whoever like convinces them to do some to get out of bed, so to speak.
Yeah, for sure. Definitely an interesting dynamic. And I agree and really like what you're doing in the sense that you're trying to drive much more data based and much more merit stuff. And, which loan is less likely to default as opposed to it being kind of a beauty pageant among lenders looking to give to those looking to take out money. So, really great what you're building there. On that note, a lot of things that startups dream of getting is an investment or joining Y Combinator. You have actually been fortunate enough to receive an offer from them, but you ended up rejecting them. Can you speak a little bit about that?
Yeah, no, I think of the few decisions we made, from a kind of like the genesis of this company, that was the hardest for us was actually rejecting what YC. I mean, it was a dream come true to get it, and I felt it was one of the highlights of that year. But at that point, we had already raised capital, right? So from that perspective, a good chunk of the allure of YC is that it's going to help your raise
The
capital
capital
good terms.
structure. Mhm.
Yeah, so we were raised already, right? So and second, we were at that point we were not an enterprise software company. We were just a direct consumer brand. So some folks will tell you that like and there's multiple counters to this fact saying like no, that's not the case. But in general, B2B companies tend to be like a much more it tends to be a much more fertile place to build within YC. But like there's DoorDash, there's a bunch of other examples of companies that did not they were not B2B. But then again, with based on the advice, we collected as much advice as possible from investors, our network of founders. And I would say like the network of founders in general told us to take YC. Investors recommended us against. Ultimately, we need to make our own decision. And based on the information we had at that time, the best course forward was to say no to YC. Had I known that we were going to pivot into B2B, I think we probably would have taken YC, and it would have. It's just a matter of like you want to increase marginally your chance of success at every step of the way. And I do think that had we been knowledgeable of the fact that we were going to pivot, we would have probably taken YC. But that's kind of a thing of the past. I think it's a cool story to tell your children, and I'm happy to talk with any of the founders on your network if they have the opportunity to take what they have the luxury to decide at some point. More than happy to provide a much wider perspective on why or not to take it.
No, I mean it's an incredible story, and I know a lot of people almost compete to do that. So it's really cool to have the opportunity, but then ultimately decide strategically that it wasn't the best choice at the time. And I have to commend you for it because I think that I'll call it the eager founder would probably jump at it. But sometimes the best decisions that we make for our business or in life are the most challenging ones. So definitely commend you on that and wish you kind of the best moving forward with the company. Another thing that I thought was really interesting, you have a LinkedIn post where there was this cute little cartoon, and there's basically a guy dragging a wagon on square wheels. And ultimately, there's a salesman trying to sell them a circle wheel. Now, we obviously know that circles or circular wheels are probably much more efficient than square wheels. But the metaphor for there was that sometimes people are too focused to really look around and be open minded and look for more simple solutions. So, why do you think that some people are really hesitant to think of a more simple way and are really just focused on the day to day?
I think it's all a matter of incentives, right? Like, and it probably who the audience is, right? Like in that cartoon, the audience are the folks that are actually pushing the cart, right? Like, meaning like the salesman of wheels is addressing like the folks that are actually working with the cart. Maybe if they spoke with someone that had a little more perspective, meaning the one that was not pushing the cart, and you could see that they were they were like spinning their wheels, so to speak. They would. So it's very important to kind of like who are you trying to reach out to in order to make the case for your business, right? Like, and the folks that are pushing the cart, like sometimes they might not have, although they're using the tool, they might not be empowered to make the decisions to which wheels they utilize, right? So it's very important that you actually speak with the folks that want more efficiency, or that you can actually showcase that the product does what it says what it's supposed to do, right? And for me, that analogy is not only like for selling, right? It's just for even for like hiring processes, things like that. That like people don't want to rock the boat sometimes because just things kind of work the way they are. And if you're still making money, or like people are not quitting, or if your family's still together, like all these things, like you just feel like you don't need to change it. But then you have existential crisis, right?
So, how do you think, or what do you think people could do to really try to, in short, look up to try to see these opportunities?
Uh, meaning like how to seize the opportunities of folks that are, I would say like first and foremost, like if you're starting very early in the state of the career, like early stage of the business, sorry, you need to probably create an incentive for them to kind of test you, right? Like
Mhm.
if you're an enterprise sales, it's not as simple. There's probably like proof of concepts, design partnerships, things like that that you can do in order to kind of incentivize adoption. If you're more in that product like growth, kind of like cheaper solutions, you can actually create like trials, right? Like things that enable you to kind of test the product, compare it. But you ultimately need to make a technical and business case for why your product is better, right?
Mhm.
And as the stakes get higher, meaning as the price of your solution gets is bigger than like it needs to get approvals and there's implementation times. I think it's important to kind of like you educate the customer, but more before educating the customers, really understanding that there's a pain point there, right? Like you don't want to be delusional and think that everyone is suffering from the same things. You want to make sure that a lot of people have the same pain points, and it's a pain point that you can diagnose quickly, and for which you actually have a solution that is significantly better than the incumbent's solution.
Got it. Really cool to hear there and great advice. And I hope we can all kind of look up and try to make the time for simple solutions in our lives. On another note, there was an interesting post that you had on LinkedIn too, where you reposted something Sam Altman said. And I know his name has been in the media a lot recently, and he's probably had a really rough last few weeks, let's put it that way. But he was in an interview with Harvard University, and he said that right now is the best time in history for entrepreneurship. Would you agree with him?
Yeah, 100%, right? Like there's plenty. We have the most developed capital markets, at least in the U.S. that has ever have ever existed, right? Like um, their their technological tools out there that make it much easier to launch a business, and that you have a platform shift, right? Like you have the internet, you have mobile, and now you have AI. That it's for all of us in speedboats, we kind of can, for very few moments in history, like the aircraft carriers that are too slow, and like you're in these speedboats that are pretty agile, and you're able to get from point A to point B much faster than like the incumbents. So you need to seize that moment. I would say the counter to that is that I would there's other folks competing too, right? So it's not that they don't have access to those tools. You just need to outmaneuver them and make sure that like you take full advantage and like uh, of those tools faster than them, and you create a moat around the utilization of those tools and adoption uh, before they do.
Yep, for sure. Definitely an interesting time we're in, and definitely would recommend anyone who's looking to take the leap to do it. You know, worst comes to worst, you can always try again. But on a personal note, in your life journey, whether it's your entrepreneurial journey or kind of your education or just work in banking, who do you think has been the most influential role model to you?
Well, I think family, right? I just see my parents sacrifice and things they have done for us. It's hard to think of anyone else than them, right?
Mhm.
There's this cartoon in Argentina that like it talks about that in order to amass a fortune, you need to turn a lot of people into flour. And the way that I see it is like my parents turned into flour for us to kind of build a much larger set of opportunities. And without their self sacrifice, I don't think even having this conversation would have been possible. So it's trying to emulate them and making the most out of the opportunities they have given us. Of course, along the way, multiple people have taken bets on me, either investors, our loved ones, our friends, family, like former colleagues, people that hired me. But it all starts somewhere, and it's those two folks loving each other and thinking that they could do a good job with a baby. That was it.
Got it. That's beautiful to hear. On another note, who's your dream dinner guest?
Dream beginner dinner guest. Uh, I think like someone that will be interesting these days will be someone that has been with a lot of interesting people. Like I've enjoyed a lot my watching like Lex Friedman's podcast,
Hmm.
or
Good
sorry, like
here.
this YouTube shows. So I do imagine that like all those podcasts kind of have a lot of preparation and conversations before they take place. or maybe they don't, but like it's long form, right? So
Mhm.
uh, I do think that that guy has had enough access to and met enough people that I think just comparing and all of that would be an interesting person to get a beer at least with, uh, uh, if not a full dinner.
Yep, for sure. So he's also would probably be one of my dream dinner guests and one of my dream podcast guests. So Lex, if you're
Yeah,
listening to
yeah,
this, I
yeah,
cordially invite
yeah,
you to go on the Business with Blumin
yeah,
podcast.
yeah.
But I think it's a great answer. And from someone who's not as seasoned as him, I can definitely say there's a lot of prep that goes into these things. I think as you kind of scale and as you get a bit more professional in setting, there's a lot more that goes on behind the scenes of these podcasts. I'll just put it that way. And Lex has done a phenomenal job. I mean, how he's able to stay insatiably curious and just straight to the point and almost look at things without bias in a way that's unprecedented by anyone in at least in what I can remember history. I think is incredible. So kudos on that answer. Um, on more of a parting note, last few things to get into, but what would you say brings you the most happiness in life?
I think it's. I mean, still, it remains to be family, right? But like it's the from a professional standpoint, I've never been as happy as I am today. Like although I love the weekends, I have to admit that I haven't had a Friday scary. Sorry, a Sundays scaries in years.
That's
I
great.
love Sunday nights. I wake up on Monday and I love Mondays. It's just building building what we're building, building something that will hopefully outlive us is huge, right? And I think although if, at the end of the day it's just software for banks or in credit unions and finance companies, it's I see it as an enhancer of like if you help all these institutions be more efficient, that means the marginal borrower will get approved. Is that if the marginal borrower gets approved, then that means that someone else's dreams, the same way that like a student loan changes, that a car loan gets helps that person get to work. If we can help folks get more approvals and move money in a much more efficient way, the world is better off that way. So if I can contribute to that, uh, yeah, adding dynamism to our economy, it's something that like allows me to like get that extra strength every day.
Yeah, making an impact, and I think that was definitely a beautiful answer. And Andres, it's really incredible the company that you're building, trying to one help companies alleviate bottlenecks in the loan origination process, and ultimately make it easier for consumers or other institutions to access capital. But on the very last parting note, at the end of your life, what do you want to be remembered for?
Uh, wow, it's, uh,
It's a good last question.
I would say, yeah, if no, and I want to have a thoughtful answer, but I would say I want to leave a legacy of humans that think that like some of whatever I did, that they were touched by love by me, that they feel that, that whenever I was able to like to dedicate my time to them, that 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 they felt it was sincere, that if no matter how long the interaction was, that like it came with authenticity, it came with sincerity, and that I was seeking to do good in my own way. But that will be us, and hopefully it lives through either this business or just children or lives that we touch through the process.
Got it. It's a beautiful parting answer, my man. And Andres, thank you so much. You've been an excellent guest. Really appreciate it. And thanks for taking the time to go on the show.
Thank you, Daniel.
Thank you for listening to my conversation with Andres Klaric. If you enjoyed the episode, rate the show on Spotify, drop a comment on YouTube, and subscribe.